or diving into investing basics. What is a bond? Imagine you have a friend who wants to borrow some money from you. They promise to pay you back in the future with a little extra as a thank you for lending them the money. Well, bond is kind of like that, but on a bigger scale. It's like when a company or the government wants to borrow money from lots of people. So when you buy a bond, you're basically lending your money to the company or the government. In return, they promise to pay you back the money you lent them, plus a little extra called interest. Think of it as a fancy IOU. You give them your money now, and they give you a promise to pay it back later with a little extra as a thank you for lending them the money. The cool thing about bonds is that they are usually considered safer than some other types of investments. And that's because when a company or the government borrows money this way, they usually have to follow strict rules to make sure they pay you back. Bonds can have different time frames, like short-term bonds that you get your money back fairly quickly, or long-term bonds where you have to wait longer to get your money back. Not only years, but in some cases, decades. People who like stability and don't want to take too much risk often invest in bonds. It's a way to make your money grow slowly and steadily over time. Sometimes you can even buy and sell bonds to other people in a special marketplace called, yeah, you got it, the bond market. But the price might go up or down depending on various factors. So, in simple terms, a bond is like lending your money to a company or the government, and they promise to pay you back with interest. It's a way for people to save and grow their money while knowing they have a pretty good chance of getting it back. And that's the basic idea of what a bond is. Whether you're thinking of investing or just curious about how money works, bonds are one way that people make their money work for them.